Um, Good morning, and thank you for joining our webinar today. We are talking about the Renters' Rights Act, so everything about how to remortgage, reinvest, and protect your portfolio. Over the last few months, we have seen significant changes to the property landscape, from the implementation of the Renters' Rights Act through to changing mortgage conditions and evolving investment opportunities. So today's session is really designed to help landlords understand not only what is changing, but how to adapt and continue building a successful portfolio in the market. So once we get to the end of the session, we'll have time for a Q&A. So please feel free to submit any questions you have as we go. Before we begin, I'd like to introduce our hosts today. So from Complete Prime Residential, we have Nicholas Smith, our Managing Director, and Anna Langford, who is the head of the group's operation and compliance. Complete are leading lettings and property management specialists trusted by thousands of landlords and tenants worldwide. And their sister company, IPI Asset Management, provides specialist asset and block management services. Joining us from the International Property Finance Group is Karen Woodgate, who is a mortgage consultant who specializes in the UK and for international property finance. The IPFG team has supported global clients from over 30 countries with funding for residential investment and commercial property. And from the Good Estate Agency, we have Howard Ratcliffe, who is the Managing Director. Howard leads a national firm operating across the UK. The business specializes in residential sales, lettings, and portfolio management, currently overseeing more than 350 million in client investment property. Thank you all for joining us today. Today's session is structured around 5 key areas. Firstly, we'll be understanding the Renters' Rights Act and what landlords need to know right now. We'll then move on to remortgaging opportunities in 2026, and then look at reinvestment and portfolio growth opportunities from there. Then we'll move on to discussing how landlords can protect their income in a more regulated market. And finally, we'll round off with building a resilient and long-term strategy. So let's begin with probably the biggest topic affecting landlords currently, the Renters' Rights Act. There's been a lot of discussion around these changes. So maybe Howard, could you perhaps walk us through some of the key legislation changes that landlords should understand?
Of course. Thank you, Emma. Good morning, everyone. The Renters' Rights Act brings the biggest changes to the private rented sector in England in a generation, affecting landlords, letting agents, and tenants alike. The journey to reform actually began several years ago with the original Renters' Reform Bill introduced in 2023, following earlier government promises to improve tenant protections. This included banning Section 21 no-fault evictions. After a number of delays, the legislation finally became law as the Renters' Rights Act and came into force on the 1st of May 2026. Now, the Act itself runs to over 230 pages and more than 140 sections. But don't worry, I'll not put you through all that today. Instead, I'd like to focus on the 7 key changes landlords need to understand right now. Number 1, assured short-haul tenancies have gone. Fixed-term ASTs have been replaced by assured periodic tenancies, meaning tenancies now roll on indefinitely until ended by notice from either the tenant or the landlord, using the correct legal process. Number 2, new tenancy rules and information requirements. Landlords must now provide tenants with key written information about the tenancy. and existing tenants had to receive the government's Renters' Rights Information Sheet by the 31st of May, which we are complete have already taken care of. Another major change is that landlords can no longer require rent in advance before a tenancy starts, only the deposit. Number 3, Section 21 has been abolished. Landlords can no longer use no-fault evictions. Possession must now be sought using recently expanded Section 8 grounds with valid legal reasons and evidence. This makes process and record keeping more important than ever. Number 4, rent increase rules have changed. Rent can only be increased once a year using a formal legal process, Section 13, with proper notice, 2 months, and the increase must reflect market levels. Tenants also have the right to challenge unfair increases. Number 5, landlords and agents must advertise a clear asking rent, and tenants cannot be encouraged or accepted to bid above that figure. Number 6, greater rights for tenants to keep pets. Landlords cannot unreasonably refuse pet requests and must respond within 28 days. Decisions must be based on reasonable grounds. And finally, number 7, new anti-discrimination rules. Landlords can no longer refuse applicants simply because they have children or receive benefits, although affordability checks and legitimate legal considerations do still apply. So in summary, these reforms represent a significant shift in the balance of the rental market. Landlords can still protect their properties and income, but success will now depend much more on good processes, proper compliance, and professional management.
Thank you, Howard. Well done on getting through all of that in a succinct fashion. So that was phase 1 of the Renters' Rights Act, which has already come into force, as Howard has mentioned. There is a roadmap in terms of what's coming next, and the government has already published this, and it takes us all the way up to 2035. So it's quite a long road to come still. Next on the roadmap is what's called the PRS database. So this is the private rented sector. This is expected in late 2026, and it will be a database that all landlords need to register their property on. And the aim of the database is to improve compliance. Landlords will need to upload key safety information and compliance information related to their property. At this stage, specific information hasn't been published on when it's available and what exactly it will look like, but we will keep clients up to date once we know more details from the government on that. Next on the roadmap is the Ombudsman. So as agents, we are already registered with the Ombudsman. However, if landlords manage the property directly, i.e. there's no agent, there's no redress system for tenants on those types of properties. So the government is making it mandatory for all landlords to be registered with an ombudsman. And this is expected to come into force from 2027 and even into 2028. So again, look out for more details on this and what's expected from the landlord. The next stage in the roadmap is coming in 2030, and this is regarding EPC regulations. So this has been talked about quite a lot in the sector of late, so it's not new under the Renters' Rights Act, and it's to bring all rental properties up to the same standard when it comes to energy efficiency. At the moment, all properties that are rented out in England need to be an EPC E, and on the roadmap, they should be a C by 2030. So there could be some properties that between now and then need upgrade works done to make them more energy efficient. So again, we will be updating clients on this, and we can support them through the process in terms of work that needs doing to the property. Lastly is the Decent Home Standard. Now, this is already applicable in the social housing sector, but it's coming into the private rented sector from 2035. And this is to set a common standard of all properties. Now, a lot of this focus on basic needs such as sanitation, central heating. So most properties under management wouldn't be affected by this because they're already compliant, but it could be that some properties need to have upgrade works. But this is 2035, so it's quite a long time in the future, but something to be mindful of as we go forwards.
Thanks, Howard. Thanks, Anna. And Nicola, since implementation began, what has the environment looked like, and what might be the longer term implications that landlords might face?
So, I mean, it's been 3 weeks. There's not been much time to see how the market has changed since the legislation came into force, but we haven't seen significant changes. We haven't had a huge amount of tenants that have rushed to serve notice. We haven't seen offers on available lettings or sales stock slow down. But across our 3 city branches, we have experienced a slightly higher than normal rate of tenants serving notice, and that's in London specifically. This does follow trend, I'd say, with the tenant profile and awareness of legislation in general that's in London. I think things like the Metro, which for people listening who haven't lived in London before, it's a free commuter newspaper that's daily newspaper, and they've been publishing ongoing articles about the renters' rights, the legislation changes, and these are the types of things that do tend to mean that tenants in London are abreast of the changes, and also they'll take advantage of the legislation quicker than tenants in other city regions. I think for the environment long term, as we've heard from Anna and Howard already, there's going to continue to be higher regulation, there'll be reduced flexibility, and there's going to be increased operational scrutiny. So I think there's going to be much more of a move towards a professional landlord model. What we would term an accidental landlord in the industry, they're the landlords that are actually being squeezed out at the moment, and the investor landlords who are able to create an investment strategy, have greater knowledge of tax and yield management. They're the landlords that will prosper in this environment and be able to take advantage of the opportunities where, let's say, the accidental landlords are leaving.
Thanks, Nicola. And alongside legislation, financing decisions are becoming more and more important for landlords. So, as our mortgage expert, Karen, perhaps you can chat to us about the current lending landscape at the moment.
Yeah, absolutely. So I would say that the lending market is definitely looking healthier, should we say, and more stable than it did kind of over the last couple of years. And we've come through a period where everybody saw rates rise really, really quickly, and lenders became a lot more cautious, and a lot of landlords, very understandably, held back because there was a lot of uncertainty in the market. But what we're seeing now really is that lenders are becoming a lot more competitive again, particularly in the buy-to-let space, which is giving landlords a little bit of confidence back, and also more choice within the market. But saying that, lenders are still being very careful. They are looking much more closely around affordability, around rental income, EPC ratings, as everyone's mentioned, and how sustainable a landlord's portfolio is overall, not just that unit that they're buying at the time. So finance, it's absolutely available. It always has been, it always will be, but landlords really need to approach borrowing a little bit more strategically now in this changing market. But I do actually think that has changed the mindset of a lot of investors. And we don't just get asked now, can I get a mortgage? It's more about having a conversation around, does this property still work financially? Does it fit your long-term strategy? And honestly, I think that's probably creating a stronger market overall.
And for those landlords coming off fixed rates, what refinancing considerations should they be thinking about?
Okay, so these are conversations that we have a lot. And I think that the biggest thing for landlords coming off fixed rates is just don't leave it until the last minute, and actually see it as a really good opportunity to just take a step back and review the whole portfolio kind of as a whole. we're seeing a lot of people at the moment who fixed their mortgages when rates were significantly lower. A lot of people at the moment coming off their fixed rates are coming off rates of kind of 2%, 2.5%. So naturally, there's a bit of a shock when they see what the repayments look like today with today's interest rates. So the earlier that you can have those conversations and start reviewing your options, the more flexibility you have. And also, it's important when you're remortgaging to look at the wider picture as well. And some landlords may decide just to refinance, carry on as normal, and that's perfectly valid and perfectly fine. But what others are doing is they're using this moment to restructure their borrowing and even releasing equity to reinvest elsewhere. And I think really that's the key shift. If you look kind of 5 years ago to now, that is a huge shift in the mortgage market. Because refinancing today, it's not just an admin exercise. It's not just your fixed rates up for renewal, let's swap it over. It's becoming part of wider portfolio planning.
Thank you. And for those looking to expand their portfolio, how can landlords use equity effectively to support this growth?
Okay, so this still stays with the remortgaging, and I think it's where remortgaging becomes actually really powerful, because many landlords are sitting on a lot of equity, whether that's in one property or a whole range of properties that they've got, and that equity is built up over time through capital growth or maybe through mortgage overpayments, which obviously helps with the growth there. But the question is now really how to use that equity really intelligently and having the knowledge around how that can help you. And for some landlords, again, it's about releasing funds for additional purchasing and building that portfolio in the amount of properties that you have in that portfolio. But for others, it's about improving your existing assets, refurbishments, conversions, EPC upgrades, because all of those things can help increase the rental income and future-proof the property. So really, when you're talking about equity, you need to see it as a tool. And when it's used properly, it can really help landlords build their portfolios, but not just ones that are bigger, ones that are stronger and more resilient to the market at the moment.
Thank you. As we've been talking about, clients wanting to reinvest, Anna and Howard, where have you found emerging investment opportunities in the UK?
As an agency, we've been based in Manchester since 2011 and have since expanded our operations across the north of England. So I'm probably best speaking about some of the northern cities we cover, like Manchester, Newcastle and York. First of all, Manchester continues to be very popular because it offers a mix of solid yields, around 6% plus in many areas, strong tenant demand, economic growth and long-term regeneration, which makes it attractive for landlords who want both income and capital growth. Secondly, Newcastle is one of the strongest yield-driven markets in the UK. 7% is not unusual, largely because purchase prices are significantly lower, while rental demand remains strong. Thirdly, York is a different proposition. Property prices are higher, therefore yields tend to be lower. However, demand is strong and tenants are often longer term and lower risk. So York suits landlords who want a more conservative, lower hassle investment rather than pure income maximisation. So I think to summarise, Manchester offers a strong balance of growth and income. Newcastle offers some of the best cash flow opportunities in the UK, and York offers some of the more conservative, or offers a more conservative quality-led market.
Thank you, Howard. That's good to hear about. Well, I'm based in London. I've got property in London, so I'm going to be Team London. It's our capital, strong investment opportunity over the years, seen as a stable city for investment. I've had a look on our website. If anyone's got sort of 10 minutes or so, please have a look on our website. We publish our development statistics every year. So our latest 2025 statistics are on there. Traditionally, prime central London, sort of zone 1, zone 2, lower yielding because of the higher pricing. So more sort of 2 to 3%. Across our portfolio, which is all over London, including sort of greater London areas, we have an average of 4.92%. So even though it's London, it's still yielding very strongly for our clients. Also due to the high tenant demand, we still see high tenant demand for London, even in this changing rental environment. Some of our highest yielding properties are in areas such as Ilford. So we've got 7.2% yield in Ilford and similar levels in Sutton as well, which is slightly south of London. So whilst traditionally London doesn't have as strong yields, we are still seeing consistent yield and consistent tenant demand in London as well, which I think is positive for our landlords.
Thank you both. Yeah.
I was going to say, Emma, I was hoping Howard was going to summarise there and just say that Manchester's excellent, but he wouldn't say that as a Yorkshireman, I'm sure. But leading on from the geographical points of note in terms of opportunities, I think the other main considerations are age considerations of stock. So that boils down to investing in either existing resale or age stock, as we would call it, versus the newer or off-plan opportunities. And I think there's positives to either situation. On the resale stock, you can plan a safer investment case, an exact yield at the time of completion for your sale. You'll have past data, which will help you review and allow easier planning for the future. And in most cases, you should be able to complete with a tenant already in situ. So that'll mean that you can avoid prolonged vacant periods. But that said, the condition of the unit, if you're going to buy existing stock, is very important now in this ever-changing landscape, and definitely since the 1st of May. I think where tenants can serve notice anytime, things like the furniture that's in place, decoration, communal areas, they will all affect or push maybe tenants to serve notice. Of the slightly increased tenant notices that I mentioned earlier in the webinar that we'd seen in our London office, actually a third of them were for tenants in one specific block, and that block itself does have ongoing communal issues with mold that we're dealing with the block management on, but itself it's actually over 10 years old. And in the units where we saw the notices being served, they were actually the units where there hasn't been new furniture, or definitely not all of the furniture replaced. There haven't been full redecorations. There've been touch-ups, maybe here and there between tenancies. So I think really it's important now more than ever for landlords to maintain their asset in order to protect their investment. I think it's also just worth noting on that point that these are, yes, large ticket items, furniture and full redecoration, but they are actually tax deductible as well, which is always attractive, and especially to an overseas investor, it's a positive in a spending money situation.
Thanks, Nicola. And Karen, I know we touched on it a bit earlier, but from a mortgage perspective, what should landlords consider when thinking to expand and diversify their portfolio?
Okay, so very similar to what the ladies have just mentioned, but from a mortgage perspective, landlords looking to expand should consider how different property types and property ages affect their financing options and their longer term affordability within that property. So older stock can often provide stronger yields, not always, but often, but lenders may look very closely at condition of older stock. It may look at EPC ratings, refurbishment needs, all of which can impact borrowing. Newer properties, on the other hand, are usually a lot more energy efficient, a lot more lower maintenance, and that can also kind of make them a little bit more attractive to lenders. But it is also important to diversify across property types as well. There's lots and lots on the market. You kind of buy-to-lets, HMOs, semi-commercial property, because each one of those comes with lots of different lending criteria, stress testing, rental calculations, all of which will affect the borrowing that's available for it. Also, to mention portfolio landlords especially, lenders will now assess the overall strength of the portfolio. So having a balanced mix of a little bit of old stock, a little bit of new stock, it can then kind of make sustainable rental income and a clear growth strategy, which is increasingly important in today's market.
Thank you. And now moving on to protecting your income in a more regulated market, I think this is becoming increasingly more and more important. Perhaps, Anna, why would you say income stability is becoming more important?
I think income stability has always been important, particularly for buy-to-let investors. They've bought the property for investment purposes, therefore the income that they generate is crucial. A lot of clients will have mortgages, and there will also be costs associated with owning a property, such as service charges. Now, we've only seen increases on the running costs over the last few years. So that, coupled with the Renters' Rights Act, make it even more important to maintain income. We heard about notice periods being longer if you do want to evict your tenant or change this tenant that's in situ. So it's important that you are prepared for this. Also, I think one of the key things is tenant referencing and making sure that the tenant that you select for your property is going to be a good tenant in terms of looking after the property and paying the rent on time as well. So it's important to have very strict referencing criteria to make sure that you are letting your property to the strongest applicant. And also, rent arrears do happen. It could just be a change of situation for the tenant that is unexpected, and insuring against that. So having rent protection insurance in place, which we offer to all landlords now, is crucial, because it does just give that peace of mind to cover your loss of income if there are any issues with the tenancy. So that's something that we would strongly recommend.
And looking at the current market, there's a bit of a mix between professionally managed properties and some landlords who choose to self-manage. Nicola, could you outline the differences for us?
Yes, I'll outline the differences and maybe kind of highlight why I do think people need professional managers. I am slightly biased on this point, I will admit, going into this answer. I did start out my career 20 years ago as a property manager myself, and now have, we've got 3 offices at Complete with very hardworking staff that, do this as a day-to-day. But I think with a good agent, you're always going to get value for money and you're going to get peace of mind. In this increasingly legislated environment, with tenants who are definitely becoming much more aware of their rights, it's, I'd say, more and more almost impossible to self-manage a property and adhere to all of the regulation that's in place. I think there's existing legislation that a lot of current self-managed landlords might not even know about. For example, there's the right to rent obligations, GDPR, anti-money laundering requirements, the government documentation that we've had to send out as part of the renters' rights. There already were documents like that you had to send previously. I think this, with maximum deposit caps, timing of when you can request the rent, the list goes on, and a professional agent will handle all of that and be abreast of the changes that are coming. Anna's already mentioned a few of them. Being aware of that and helping to plan for that means we're planning for the landlord and protecting your investment, not just doing it from the goodness of our hearts, but I think also with the compliance, it's important to note that a professional agent will really probably provide the best return on investment, and that would be through being aware of market rents. Now that we have to provide comparables to serve the Section 13 notices at the rent review point that we've mentioned, we know the best rents to push for there and hopefully prevent those tenants that are going to go to tribunals or contest those. I think also as Howard mentioned way back at the start of all of this, there's now no bidding on rents. So when you're using a professional agent, they will know the importance of that rent that your unit's going to the market at and what it's going to be advertised for. You don't want to kind of pitch it too high that you're not going to get the interest from people coming to look, but you also don't want to pitch it too low anymore because people can't pay higher than what you've advertised it for. So, I do think with all of that in mind, yes, people have to pay for a professional property management company. But I think when you take into consideration the responsibility that these companies take on board and the workload, that I do think the average fee is generally fair. It's tax deductible, as I've mentioned previously on some of the other things, but it's also time. That's the main difference between professional property management and self property management. It's time. I don't know about everybody else on this webinar, but I am influenced, shall we say, constantly about how important my own personal time is with my family, how I choose to spend it, my mental health, and self-managing properties. It's a full-time job. So I think as long as being aware of the cost of how going into professional property management, it's worth making sure that people understand the time they will get back if they go down the professional property management route.
Thank you, Nicola. So as we begin to wrap up, and moving forward in this environment, what would you all say landlords should consider in this new landscape?
Well, first of all, I think what we see with our most successful investors is that they rarely sell. And in many cases, they never sell. They understand that property wealth is usually built by holding good assets over time, allowing rents to grow, mortgages to reduce, and capital values to increase. Rather than asking, should I get out? They ask, how do I strengthen my position? So that means focusing on a number of things. Portfolio performance. Is every property earning its keep? Cash flow and mortgage resilience. Can it cope with rate changes, voids or arrears? Property upkeep and maintenance. Protecting the assets and avoiding costly issues later. And tenant quality, compliance and risk management. Good systems matter now more than ever. Of course, there may be circumstances where a landlord does need to sell, but timing is now more important than ever. Under the new rules, a landlord generally cannot recover possession to sell within the first 12 months of a tenancy, and after that must give 4 months' notice. So planning ahead is essential. I think ultimately the most successful landlords don't just think about exiting, they think about building a stronger, more resilient portfolio for the long term.
Thanks, Howard. All great points, I think. My finishing thought is about maintaining your professional relationships. So when you do want to sell, buy again, remortgage, you have those professionals on hand. You will need a mortgage broker, most likely. You will need an agent, you will need a solicitor. So knowing who those people are that you can reach out to when the time is right, I think is really important, because it just helps with the efficiency of the process, and having people who can communicate with each other and work well together to achieve your objective as quickly as possible, I think is really important. So that's my sort of final thought for today.
Thank you, Anna. Okay, finally from me, my final thought. When it comes to mortgages, it can very, very often feel like a minefield. So just make sure you lean on the professionals that are around you. So whether that be your broker, your agent, your solicitor, they do it day in, day out. They're very knowledgeable. So use that knowledge that you've got around you. from your own point of view, it's very, very important to be prepared for remortgaging well in advance, because those dates, they often come around a lot quicker than what people expect them to. So keeping your documents organised, maintaining healthy bank accounts, tracking when your mortgage deals start and end, even just on a simple Excel spreadsheet, that can make a huge, huge difference when it comes to remortgaging.
I'm going to take myself off mute first of all, and then I'm going to go off on a tangent. I think Anna's touched on this slightly, but I think from quite a few of the questions that have been popping up, my final thought does relate and hopefully might answer a few of those. And that is really to know your tenant and to protect yourself against the bad ones. And the rent protection that is in place and available with kind of across the industry and most professional agents now, I think is vital. The policy that we offer, that actually I believe is the same as yours, Howard, it covers non-payment of rent, legal fees, it covers damages above and beyond deposit totals where it's caused by a tenant. It also then covers up to 90% of the rent for 6 weeks of a void period between tenancies whilst you're looking for a new tenant. And in all of the cases, in all of these cases, you're going to need to pay for a professional referencing company to make sure that you can benefit from this type of policy. The information now provided from professional referencing companies really does give quite a bit of detail on tenants, and I think it really helps reassure landlords and agents moving into this new style APT agreement where the tenant's generally going to be in place, hopefully, for longer.
Thanks, everyone. And now we are on to our Q&A. I know we've spoken so much and actually covered a lot of the questions that have come through already, but we've got about 5 to 7 minutes. So let's actually get going on the first few that have come up. Can I still evict a bad tenant? Perhaps, Howard, you can touch on that a bit.
Yes, of course. Yes, you can still evict a bad tenant, but landlords will need to use a legal ground and proper evidence, such as rent arrears or antisocial behaviour or tenancy breaches. Section 21 is obviously going, but the right to evict a bad tenant is not. The process just becomes a bit more evidence-based, if you like.
Yeah, I think on that point and in that answer, Howard, for most people on this call, I think, and for most landlords we speak to, the bad tenant is the rent arrears one, the non-paying tenant, shall we say. You definitely can still evict this type of tenant, as you've just said. The only difference really is timescales and that they've increased. So I think it's worth noting down some of these timescales. So to serve notice under mandatory grounds now, the tenant must owe a minimum of 3 months' rent, whereas before it was 2. And that's in a case where they pay monthly. And previously, the notice that you would serve would have been 2 weeks' notice, and now it's 4 weeks' notice. So, actually, in the grand scheme of things, I don't think it's that different. And I think it's, something landlords shouldn't be too concerned about.
Thank you. We've got another question here. Can tenants leave whenever they want?
I can answer that, Emma. So all tenancies now are periodic, so they're rolling tenancies. So tenants can now give 2 months' notice at any time within that, but they must give notice on the rent payment date. So they have to give 2 clear months' notice. So in terms of being able to relet the property, after that, it is plenty of time for us to look for new tenants, which is the positive, but there is no fixed term anymore. So tenants can give notice at any time. So that is something to be prepared for. And it goes back to what sort of Karen and I said in our final thoughts about sort of maintaining your information on your property so you are ready to act when the tenants give notice.
Thank you. And this one here, Karen, I think this is for you. What would you say a good mortgage rate is at the moment?
The $1 million question, the one that we get asked a lot. A good mortgage rate at the moment very, very much depends on your circumstances, your deposit type, the type of deal that you're looking for. But based on the market at the moment, I would consider around between kind of 4 and 4.5% to be a really good rate in today's market.
Okay.
I've
Thank
seen
you so
one.
much.
I've got one here, Emma. I can
Yeah.
read it out. With the new Rental Rights Act, how easy is it to sell your property which currently has a tenant? I think we have touched on this a little bit in some of the content of the webinar, but I think a direct answer is easy, yes, if you're going to sell to another investor. So, we've discussed the opportunities where maybe the accidental landlords are leaving and investor landlords can buy up some of these properties. So, yes, if your property is for sale and an investor buys it, you're not going to have to serve notice on your tenant and wait for that period. But if you're looking to go to the market and attract owner occupiers who are going to want to buy the property, then it's going back to the notice periods we've already mentioned, which is that you can't serve notice within the first 12 months of the tenancy, shall we say, and then it's a 4-month notice after that. So I think I've just squeezed an answer into that one there, and I haven't really left much time for anyone else other than for you to wrap it up.
Yeah, unfortunately, I think we are just out of time. But for those questions that we haven't yet got to, you've got our email. So please do get in touch if you need anything clarified further. After this webinar is done, we'll be sending around a link to our podcast so that everyone can listen to this same session in their own time. So please look out for that email. And yeah, thank you again to our hosts, and thank you to everyone who has joined and taken the time out of their Thursday morning. Yeah, have a good day further, everyone.
Thank you.
Thank you, everyone.
Bye-bye.
Thanks.
Bye.
Bye.
Thank you. Bye.